Good afternoon. I hope you all had a great day. First off, we'll get into how the market performed today. Overall, the market had a nice day right from the start, opening up by 0.92%. The S&P 500 ended up 0.9%, while the Dow was up a slightly lower 0.56%. The S&P 500 was led by IPG Photonics Corp., a developer and manufacturer of a line of fiber lasers, fiber amplifiers, diode lasers, laser systems, and optical accessories that are used for various applications. They ended up by 21%. Jack Henry & Associates offers a range of products and services, including processing transactions, automating business processes, and managing information financial institutions and diverse corporate entities. They ended up by 8.75%. The biggest losers in the S&P were Norwegian Cruise Lines, which dropped more than 22% due to fears of it filing for bankruptcy. WestRock Company also had a terrible day. WestRock is a multinational provider of paper and packaging solutions for consumer packaging markets. They ended down 17%. Taking a look at the specific sectors, we see that the top performers were healthcare, tech, and utilities. However, all sectors on average ended in the green, backing the nice performance by U.S. equities today. Looking at this table provided by Morningstar, we see that for the second day in a row, all sizes of growth stocks outperformed core and value stocks. Mid and small cap value stocks are the only type to finish negative on average today. However, this downward movement is very slight. Finally, taking a look at commodities, oil posted a very nice day today, being up close to 24%. This is its fifth straight day of gains. Natural gas also had a nice day, achieving a gain of 4.47%, backing up its positive performance from yesterday. Taking a quick glance at currencies, the US dollar gained strength today, backed up by the prospects of reopening the economy in some US states and countries around the world. Also, there was a US service data report that showed to be better than the market expectations. The United States PMI, which stands for the Purchasers Price Index, dropped to a record low today in the United States. The PMI is an index of the prevailing direction of economic trends in the manufacturing and service sectors. It consists of a diffusion index that summarizes whether market conditions, as viewed by purchasing managers, are expanding, staying the same, or contracting. This box chart gives us a good picture of how the PMI has been declining. New business and employment contracted at record pace as customers postponed or canceled orders amid ongoing global lockdowns, with new business from abroad falling the most in 11 years. On the price front, input costs fell partially due to lower wage costs, while output charges posted the largest decrease since data collection began on efforts to attract clients. Looking ahead, business sentiment dropped to a fresh record low. Starting off the day, stocks rose as investors believe that stocks are going to benefit from government officials allowing business to reopen and Pfizer beginning human trials with its coronavirus treatment. Indiana, Missouri, and Kansas have begun their phase 1 of reopening, while California is considering entering the second phase, which will allow, quote, low-risk businesses to come back. However, according to figures from Johns Hopkins University, infection rates continue to remain high, at 20,000 new cases a day, and an Associated Press analysis said that numbers in the rest of the United States are moving in the wrong direction. Taking a look at some earnings today, we start off with Fiat Chrysler, ticker symbol FCAU. Fiat Chrysler is an automobile maker that designs, engineers, manufactures, distributes, and sells vehicles for the mass market under the Fiat professional brands and Chrysler brands such as Chrysler, Jeep, Dodge, and others. EPS came in at 33 cents per share, with revenue at $22.7 billion. The consensus estimate was EPS of 6 cents on revenue of $23.5 billion. Revenue fell 18.4% from a year ago. Fiat Chrysler mentioned that it expects to start the majority of its Northern America operations on the week of May 18th. The CFO also mentioned that he expects the second quarter to be the company's worst of the year, with a significant adjusted loss before taxes and negative free cash flow. Next, we have new residential investment, ticker symbol NRZ. New residential investment is a popular REIT that specializes in residential mortgage-related assets and known for its high dividend yield. NRZ reported first quarter March 2020 earnings of 48 cents per share on revenue of $402.4 million. The consensus estimate was 24 cents per share on revenue of $215.5 million. Revenue fell 8.3% compared to the same quarter a year ago. This report was taken greatly by investors as it ended the day up 7.59%. Disney, ticker symbol DIS, also reported today. Disney is a diversified entertainment company with operations in 5 business segments: media networks, parks and resorts, studio entertainment, consumer products, and interactive. Disney reported second quarter March 2020 earnings of 60 cents per share on revenue of $18 billion. The consensus estimate was 83 cents per share on revenue of $18 billion. This was a decline in EPS by 62.7%. Disney took its biggest hit from its theme parks and cruise businesses, but got a boost by its streaming services Hulu and Disney+. Disney decided to suspend its dividend for the entire first half of the fiscal year to conserve cash and weather the wrath of the coronavirus. A smart move made by the new CEO. Looking at what segments performed the best for Disney, the direct-to-consumer segment shows the promising growth for the company. This segment contains its streaming services, which now has 54.5 million paid subscribers, up from 33.5 million in late March. Beyond Meat, ticker symbol BYND, is a food company which engages in the provision of revolutionary plant-based meats in the United States and internationally. It offers its products in plant-based platforms of beef, pork, and poultry in ready-to-cook and ready-to-heat formats. Beyond Meat reported first quarter March 2020 earnings of 3 cents per share on revenue of $97.1 million. The consensus estimate was a loss of 6 cents per share on revenue of $86.9 million. This is revenue growth of 141% and the first positive net income quarter that they have achieved as a public company. These numbers were seen as very positive to investors, as Beyond Meat has been exploding during the day and after hours trading. Any investor would be excited to be in a company with that ridiculous amount of revenue growth, especially as it may begin its run of being profitable. They achieved this growth even though its sales to restaurants dropped significantly due to restaurants being shut down. Sales at its U.S. food service channel rose 156% to $22.6 million in the first quarter, while sales grew 57% to $18.6 million in the international food service business. Activision Blizzard, ticker symbol ATVI, is an online, personal computer, video game console, tablet, handheld, and mobile game publisher. Activision Blizzard reported first quarter March 2020 earnings of 54 cents per share on revenue of $1.8 billion. The consensus earnings estimate was 33 cents per share on revenue of $1.3 billion. This is an EPS growth of 116%, but a revenue decline of 2%. Do note that net bookings, which is net revenue excluding deferrals, rose by 21%, showing the strength of gaming during this pandemic. It is good to see growth like this in a gaming company, but I don't know if I believe the hype, as once the pandemic is over, I highly doubt this level of spending on gaming will be kept up and won't be reached again until a couple of years. Lastly, we have Planet Fitness, ticker symbol PLNT. Planet Fitness franchises and operates fitness centers under the Planet Fitness name. It operates through 3 segments: franchise, corporate-owned stores, and equipment. Planet Fitness reported first quarter March 2020 earnings of 16 cents per share on revenue of $127.2 million. The consensus earnings estimate was 36 cents per share on revenue of $156.9 million. Next quarter will be even more disastrous for Planet Fitness, as most of the effects of the pandemic won't be felt until second quarter earning reports. Planet Fitness has rallied significantly since March lows, rising up by almost 100%, however being down from its 52-week high by 35%. I believe that this is completely irrational, as they are currently receiving hardly anything in revenue, nor will they receive much for the whole year. On top of this, consumer trends seem to be changing, as consumers are purchasing more home workout equipment, which may signal a push towards consumers continuing to do home workouts, and gyms will continue to be a hazard, as they are a bacteria breeding ground. That wraps it up for what moved the market today, on May 5th, 2020. Thanks for watching. I hope you have a nice night.